Bitcoin shrugged off the doomsday news of the last 2 weeks, with banks collapsing in the US, further interest rate rises, and the fear of impending recession. These talks have been going on for 9 months now. And if you remember back 9 months ago, that was the June low in Bitcoin and for the S&P and for the NASDAQ. Since this time, the markets have been extremely bearish, yet we are not seeing the same sort of bearishness in the price chart. The price chart is the facts of the market. This is where we go to find the real data, not from the headlines and not from the noise that's going on out in the news media around yield curve inversions and further bank collapses, which is how other crises have started in the past. What we want to look at today is the objective data, looking specifically at macro green signals on Bitcoin. Each time these have happened in the past, the market has already put a bottom in. So this is further confirmation that the Bitcoin low is in and that any downside that we see in the market could be a fantastic dollar cost averaging opportunity. Basically, the old buy the dip is back. Now I've got these major signals to show you that work on Bitcoin, cryptocurrencies, and most importantly, traditional markets, because there's no point in using indicators that just work for Bitcoin. We need indicators and signals that have been tested over decades. In fact, these have been tested over 100 years using Gann analysis. And that is the specific technical analysis that we use at the Investor Accelerator. So quick shout out to our free crypto and economic report. We put exclusive content into our newsletter that comes out once every 2 weeks. There is a ton of detail in these newsletters, stuff that we don't put on our videos, and only things that we can look at with writing and charts so that you can get the most out of what is actually happening in the market. You'll find a link to this free report in the top of the video description, so sign up to that and you get it sent to your inbox once every 2 weeks. And while you're at it, hit that like and subscribe button. Don't forget about those. Okay, so Bitcoin. Massive green macro signals that basically confirm the bottom is in. We obviously have a couple more that we are waiting for, but in this video, I just want to go through a macro one, which is relating to the monthly candles. Of course, you can use the bars, which I also prefer, but candles are showing this a lot easier. It's much easier for the eye to see this. Now, March still has 7 days, 22 hours to go. So essentially 8 days. And of course, it's cryptocurrency, anything can happen. But if you've been following the channel, you'll note that we have made a lot of content and a lot of analysis about many macro bottom signals that have come out over the last several months. This is just another one that I want to add to that toolbox of yours, and hopefully you're building that toolbox for your trading and investing. Meanwhile, the rest of the market is anticipating further downside, and this is getting further and further away from the truth. Now, enough of my rambles. Let's have a look at this particular signal itself. And we can go back through previous cycles to have a look at just exactly when these have come up. We saw one in January, but I want to take it to March because we're really starting to see this market push away from the lows on ever increasing volume, which we've covered many times before on the channel. Most recently was yesterday, and this also comes up on S&P and every other market because essentially it's just showing you where buyers are coming in. But this is really looking at where those accumulation levels had formed, and then we look for that breakout on the monthly candles. And so we can see the monthly candles here in the case of April of 2019, in July 2020, another one here in October 2020, as they attempt and actually confirm a breakout of an accumulation zone. And that's precisely what we have just seen right now. We're 8 days from this, but the market dropped into June, and we're basically looking to close above these levels. So I want to have a look at this, how this is formed every single time and how the market has already bottomed, how far back the market had bottomed from that point, and basically a look to the upside from here. So January is basically the most recent one, but we want a little more confirmation of the signal there, which is why we're waiting for March to close. And if it does in fact close, we want to see it close above 25,300. So that's another key level, which is the tops of August and for February. Now going back into 2020, this is the reaccumulation zone before the market broke out into that final run of the major Bitcoin bull market the pullback and then the push again. You can see again, there is a clear resistance level before the market's able to break out and form another higher low. Now we can take it one step further and go to the October 2020, where the market then again breaks out of all of these tops. That's why we're focused on 25,300 as a key level for Bitcoin to maintain over the next 8 days, to close above, to confirm this massive green signal. We saw it in January, nice push up. The previous Bitcoin bear market low consisted of 4 months of accumulation before we then saw that breakout month. And so when that month closed above that accumulation range, there was obviously a nice big run from that point. It's essentially the bulls letting the bears know that they've lost and that they are about to get destroyed to the upside. But we're still early days in that cycle, so we're not going to get too excited to think that we're going to go to new all-time highs from that particular pump. The bears will have their day again. They'll get excited and they'll most likely get a nice pullback from wherever this top comes in. That's going to be a good time for the bears, another good time for entering into the market. But essentially, we don't want to keep buying all the way up into the peak because things can get very overhot and overheated. So this is going to be the time where the bears come back in thinking that they have won the show, and we're going to see some further declines. Wait to see where that top comes in for Bitcoin. Could be 30, could be 40. Let's wait and see what happens. Previous cycle low in 2015. So we're going back 2 cycles now. You can see the month here in October 2015. We had the accumulation range all the way up to about $290 before Bitcoin broke and closed above that accumulation range. That again is signaling that the bulls are in control. It's broken out of that accumulation range and it's ready to go on that next stage of the run. There's always going to be periods after the bulls break out that the bears regain control for a brief period of time. And it's going to most likely be a shorter period of time than any time previous to that. So that's another key area that we have to look out for when the bears do get control again, because the fear will come out and it can last for, like we can see here, a month, maybe 2 months. Like we saw in 2019, it was multiple months, 1, 2, 3, 4, 5, 6 months before the market really got a push on in January. Obviously, the pandemic took control at that point, but then the market took off from there. And the bears really didn't get a say again until the following year in May. So the breakout confirmed by the bulls as it broke and closed above that level on the monthly candles. Happened again as it broke out of the reaccumulation in May and again in June. And of course, the bears took over for a couple of months after those spike attempts. But nonetheless, the bulls took over because the low was in from that point. And the market, using our Gann swing indicator, was putting in higher and higher lows. That's our Gann swing indicator here. Another look at that is in the top of the video description so that you can learn how to use that for your trading and investing to give you a mechanical plan. Nice and simple entry and exit strategies. Now to the previous cycles. This was the bull market of 2012 and 2013, where it peaked in November of 2013. So starting back at the low, we had this bar, or this candle right here in June 2012. Here is the area of reaccumulation or accumulation after that first dump. Market closed above those levels here in June, and that was that signal that the low was in. That was it. There was no more attempts by the bears to be able to overcome that low and push that market down. The market rallied from that point, making a new all-time high. Then we find ourselves with the bears in control once again. This time just for 3 months. We had reaccumulation before the final peak. The bulls said enough's enough, pushed the market up and closed above it, which is just signal that things are going to get really spicy really soon. This is of course at the end of that cycle, but we're more like in this sort of scenario right now where the market's been down for some time and most closely resembles something like 2014, where this could take a little bit more time rather than the ends of the cycle at the peak where you get this quick blow off move. Now if you take it off log, you can see just how big that move is. This was the breakout point saying that the bears, it's over. We still have another move to go. The bulls take control. That was too fast, too quick. But of course, a lot of gains can be made from $200 to $1,200 and down she blows from that point. The data is showing us that this signal is not to be messed with. This is not one of those things where you can say, well, if the market comes back, we're going to see lower lows. It is almost 100%. Bitcoin doesn't have enough data to show that, but these are those sort of signals that you don't want to mess with to hope that the market goes below the previous low at 15,500, or get even greedier, expecting a 12K or a $3,000 Bitcoin, which is completely out of the question. There is no $3,000 Bitcoin. If anyone wants to take that bet up with me, I will gladly take it up with you. There is no $3,000 Bitcoin, $10,000 off the table as well. But let's have a look at the timing here. Enough of the gambling in our own thoughts of the market. Let's have a look at how long these ranges take. We can see that we're 4 months from the low now. But going back to the first one here, the low to where the breakout month happened, approximately 7 months. So you can see here we got 7 bars. The next range, 3 bars. The next range, 9 bars from that breakout. Now, this is also a low here, which was 2 months earlier to where the breakout was, but this is the index chart that we're looking at. So on many exchanges, the August 2015 low wasn't the final low, it was a higher low to January. So that's why we're using January in this case, but keep both in mind because they were significant lows during that bear market. So basically 2 months to the August, but the low we're using here is the January low, which is 9 bars earlier. The next one we have is 4 bars from that breakout in April to where that low was in December. Now, of course, there's another one here, but this is the breakout after the breakout, which we'll get to once the market starts to break a little bit higher. But we can also measure these from those the cycle lows as well, which again was 4 months. So the COVID crash low to the breakout of all of those highs, you can see the month here in July closed at 11,350, which was above all of these levels, everything getting rejected. So the resistance was playing in, and then the market broke out of that resistance. And finally, we find ourselves here at 4 months. You can see a very nice repeating pattern. 4 months. The low, the breakout, previously 4 months. Previously again, 4 months. Previously 9 months. So 2 lots of 4, giving you that 8 to 9 month period. You've got 3 months here. So just short of the 4. We're talking macro cycles here. And the previous one, 7. So divide that by 2, there's 3.5, close enough to 4. This is how we use those timing aspects of the market. Like we can see here, it hasn't been broken. Once we break past these significant monthly tops and we get that close, 7 days, 22 hours away from that point, then there's been no other situation in Bitcoin's history that the market will come back and make a new low, essentially confirming that the bottom is in. We've broken above weekly swing tops. The market is closing above significant previous resistance levels, and that means we are basically on for another bull market. There will come a peak, and we will start to see pullbacks eventually, and maybe they come all the way back to test those highs like they've done in the past, in which case the bears again will get very, very excited and very, very loud, meaning the news headlines and the fear and the emotion gets really, really wrapped up. But just pay attention to the chart. If they can't, or if the bears, the shorts, can't break past significant previous resistance, which then becomes support, there's another signal that the market is telling you support is in. These are going to be the next entry levels as you buy the dip, and the market will start to push up again. Slower at first, and at the end, it gets faster. That's just what happens because more people believe that the bull market is on. The bears have to flip because they are wrong. And that's why the market speeds up, because everyone starts piling in. It's the sheeple at the end of the move that make the move the fastest. Now you might be wondering, well, if there's still 7 days, 22 hours to go, why are you so confident on this? Well, we've had January break above these previous levels, which was 2 months from that low. We've seen that happen in the past as well. We're also broken past the highs on a weekly chart, which we've also covered here on the channel. And in terms of timing over for the overall cycle, we are at that low point at around that 360 to 400 day lows. We've covered many of the reasons why we think this is the low, and we typically see the breakout happen after that point rather than looking for it early on. Now, I'd be very cautious of using this same sort of scenario if it was early on in the bear market, so from the peaks to the downside, I'd be much more cautious. But because we've gone down for so long, we've broken back past a lot of the fearful news announcements like what happened with FTX and a lot of the fundamental collapses in the market, and the price is now getting back past those. that just puts more and more emphasis on the side of the bulls, yet we're still cautious. And if we need another signal here, 200-week moving average. It's not one that I use often, but it's an interesting one to keep note of because a lot of the market does look at this particular signal. And so we've seen over the course of the history of Bitcoin, it come back, test the lows, and bounce away from them. Now, if we clear up this chart here so we can just look at the 200-week moving average, you can see that it's used it as support many, many times. In this case, the first time in Bitcoin's history, it broke under the 200-week moving average, used it as resistance, whether you're looking at it on the weekly chart or the monthly chart, resistance, and fell away from it. But it didn't last too long underneath this level. I mean, 9 months is a pretty good time frame to be able to be buying up the dip at the lows. But as you know, many people during this period where we're looking at lows here, June and September and of course November, as the market the bottoming process, many were still extremely fearful of much further downsides, looking towards 9,000, 8,000, 10,000, you name it. Whatever the low price was, they were expecting that and continuing to hold on, even though the move was getting shorter and shorter. So now we find ourselves breaking back above, testing the 200, falling away from it on the banking collapse, which is what this March low is. And now we've pushed past those prices with 7 days, 22 hours to go for the monthly to potentially close back above the 200 week. Now, if we go down to a weekly chart, last week, which you may know, it closed above the 200 week moving average. Of course, in the past, it has done that before and then fell back under. So let's stay cautious and see whether the market will pull back and use it as support this time, somewhere around 25 to 26,000, which could be another good buying opportunity, and use it as support to then springboard from to push to higher prices. So I'll continue to update this particular signal. I think it's almost in the bag at this case. Obviously, there's a week to go, but we're seeing many, many good signs of the market breaking back above double tops and everything else that I've covered here on the channel. So make sure you do subscribe, like the content, have a great weekend. And if you want to get the crypto and economic report that comes out once every 2 weeks, exclusive stuff where we look at the macro cycles, looking at the real estate cycle as well as Bitcoin and cryptocurrencies. Do use that link here, crypto and economic reports. Sign up to that. You'll get that in your inbox. Have a fantastic weekend. I'll see you guys at the next video. Until then, peace out.